a world dominated by rapid technological advances, traditional banking stands at a crossroads, facing a steep decline as digital finance rises to new heights. The inefficiencies embedded in brick-and-mortar banks expose their vulnerability, revealing a reality of high overhead costs tied to leases, salaries, and regulatory burdens. These establishments, encumbered by physical expansion needs that require billions for new branches, simply can't compete with the speed and agility of digital finance players like SoFi. SoFi's innovative digital model is a breath of fresh air in an industry stifled by tradition. By eschewing physical locations, SoFi eliminates the costs associated with rent and staffing, while streamlining customer interactions through technology. This cutting-edge approach not only provides instant access to financial services, but also allows SoFi to scale rapidly, reaching millions through targeted digital marketing. In a landscape where younger generations, millennials and Gen Z, demonstrate a clear preference for app-based solutions over in-person banking, SoFi is positioned perfectly to cater to this digital-first mentality, fundamentally reshaping the customer experience. At the core of SoFi's transformation of financial services lies its comprehensive business model, designed as a one-stop financial super app. While traditional banks cling to a fragmented approach, SoFi invites customers into an integrated ecosystem covering banking, investing, lending, and financial planning. Whether it's a checking account, investment in stocks or crypto, or obtaining a personal loan, customers find themselves embedded in a seamless experience that encourages loyalty. Cross-selling opportunities flourish as new relationships are formed. Students taking loans can easily convert to checking account users, transitioning to credit and investment accounts, creating a cycle of increasing customer lifetime value. With all financial needs met in one place, retention rates soar, solidifying SoFi's role at the forefront of financial innovation. As the market adapts to the changing tides, naysayers may question SoFi's valuation, but the undeniable momentum suggests otherwise. Analysts and savvy investors can recognize that SoFi's growth trajectory, reinforced by a digital-first ethos, positions it as a catalyst for significant returns. In the infinite landscape of digital finance, where traditional banks falter and technology leads the way, SoFi stands not just as a participant, but as a formidable leader, paving the way for a new era of financial services that will ultimately reshape how banking operates as we know it. In the financial landscape, SoFi's growth shines brightly, standing as a beacon of efficiency and profitability amidst the chaotic waves of startups. With revenue surging by 19% year over year, the company encapsulates the essence of what fintech should represent: adaptability and strength. Their ascent to profitability, marked by a remarkable 148% increase in net income, is everything the traditional banking sector fears: a robust, scalable model that thrives without the burdens of legacy costs. This explosive trajectory is underscored by an astronomical rise in customer deposits, jumping from $1 billion to an astonishing $23 billion in just 2 years. The staggering 2,200% increase is not merely a number. It's a testament to SoFi's ability to attract and retain customers in a way that traditional banks simply cannot emulate. While many fintech enterprises grapple with cash burn and the high costs of customer acquisition, SoFi defies odds, proving its sustainable business model resonates in a fiercely competitive arena. However, Wall Street's perception of SoFi often misses the forest for the trees. After posting impressive earnings, the cautious guidance shared by SoFi's leadership led to a stock price drop, yet this was a moment of opportunity rather than despair. Historically, Wall Street has stumbled through disruptive innovations, underestimating entities like Amazon and Tesla. SoFi finds itself in a similar narrative. The prevailing view is that digital banking is the inevitable future, and SoFi is at the helm, transforming customer experiences with unparalleled speed and efficiency. At the crux of SoFi's profitability lies its strategy of leveraging low-cost deposits. Unlike traditional banks that engage in costly borrowing, SoFi's funding through customer deposits lays the groundwork for more favorable lending conditions. A leap from $1 billion in deposits to $23 billion reflects not only growth but the promise of reduced lending costs and consequently elevated profit margins. This transition to a customer-funded model grants SoFi significant resilience against economic volatility. Critics may argue about SoFi's competitive edge or assert it faces overwhelming competition from big banks, yet these claims overlook the dynamic nature that SoFi embodies. With a loyal customer base and innovative practices, SoFi dismantles traditional assumptions about value in banking. While others cling to the past, SoFi charges forward, illustrating that modern banking doesn't merely shelter in mobile apps. It thrives on digital savviness and customer-first philosophy, unlocking a brighter future for finance. Investing in SoFi stock presents a lucrative opportunity for savvy investors who are willing to embrace a strategic approach. With an impressive beta of 3:1, SoFi's frequent fluctuations make it a prime candidate for options trading. One effective method to harness this volatility is the wheel strategy, which revolves around two main elements: selling cash-secured puts and covered calls. By selling cash-secured puts, an investor can secure their position while gaining premium income. When the stock dips, this strategy allows for purchasing shares at a discount, enhancing the overall investment positioning. As the investor navigates the dance of the stock price, the option for covered calls emerges. If the stock appreciates, selling it at a profit creates further revenue streams, while if the stock price remains stable or declines, the premium continues to be a safety net. This cycle of consistent selling and reinvesting can be repeated on a weekly or monthly basis, providing a reliable cash flow that can lead to annualized returns ranging from 45% to 100%. This powerful strategy combines prudence with opportunity, allowing investors to capitalize on SoFi's dynamic market movement. Beyond the immediate gains in options trading, it's essential to recognize the broader context in which SoFi operates. The financial landscape is undergoing a significant transformation, with neobanks and AI-driven financial services rising in prominence. Traditional banks are struggling to adapt swiftly, leaving a gap that companies like SoFi are eager to fill. As digital transactions become the norm, regulatory trends are also favoring fintech expansion, creating an ideal environment for innovative financial solutions. Foresight in investing now will allow investors to stake their claim in a company that is not merely riding the wave of change, but is actively shaping the future of finance. In conclusion, SoFi emerges as a compelling long-term investment choice, characterized by rapid growth and innovative service offerings. As traditional banking continues to lag behind, the time is ripe for investors to position themselves strategically before the market fully comprehends SoFi's potential. This is not just about extracting profits from stock appreciation or options trading. It's about being part of a burgeoning financial movement. To gain deeper insights and real-time strategies, potential investors are encouraged to engage in communities that offer exclusive resources and expert guidance. The journey of financial empowerment starts now, and investors can either seize this chance or watch from the sidelines as others achieve remarkable success.